Hey, how's it going, guys? Being Child's founder of the Teach Me to Fish Effects trading community, and I'm back with this week's weekly supply and demand Forex market forecast. All right, guys, let's go ahead and get into the video. All right, we're here on the dollar index. We're going to start with the dollar index because most of the pairs, or all of the pairs that we go through, cross the US dollar. So, the institutional bias that I have come up with this week, the short term institutional bias that I've come up with this week for the dollar is short. Let's take a look at the chart and see what we have. We do see where the dollar did push up into this institutional supply zone, uh, tapping into this 4 hour unmitigated zone, and then we got an immediate reaction off of that. So that definitely could play into the dollar being short, simply because there are or were short orders here, institutional short orders that were filled and caused the dollar to push out of this area of interest. So what I will be looking for is simply a pull back, all right, and then maybe trade the dollar to the downside, uh, either taking profit at this 4 hour demand zone that I have charted here, or simply just trailing my stop. All right, we do have an institutional zone or demand zone down here at the bottom that I think that the dollar could be targeting before pushing back up. But again, we're going to wait for price action to see how that plays out. So again, institutional bias for the dollar is short. I'll be looking for some pullbacks. This may be the start of a pullback, but we may see the dollar push down a little bit, give us one of these numbers, and we can get in and possibly play this down to this 4 hour demand zone. This 4 hour demand zone. I didn't mark this one up, but let me mark this one up right here. We do have an unmitigated 4 hour demand zone here. All right, let's go ahead and mark that as a demand zone. So these are good places for us to take the market down. All right, good targets for us to take the market down to. So short term institutional bias is short for the dollar. All right, moving along to the Aussie USD. The short-term institutional bias I have for this is long. Okay, Aussie dollar long, USD short. Again, this will call this instrument to go up. What will I be looking for? Again, prefer to get a pullback. Okay, we don't want to buy at the top, but we want to buy somewhere at the bottom. So we do have this unmitigated 4 hour zone. Take that off. We do have this unmitigated 4 hour zone on the Aussie USD that we could possibly look to buy into and take this pair up. We do have 4 hour supply up here, uh, and we will be approaching this institutional demand area as well. So, and it's a pretty large institutional demand area. So, we definitely have some targets for us to take this upward. I don't know how long this will go up, but we are on a 4 hour uptrend. All right, we can definitely see here where we have had demand created and respected. We had a demand here that was created, price went up, came back, respected it, pushed up. Um, this demand area was not so much respected, but we did have a new demand area that was formed, came up, it was respected. So again, we are getting a respecting of demand, and so that definitely puts us on an uptrend, as well as these higher highs being created and taken out. But again, we trade supply and demand here, so we based our trends off of the respecting of zones. Okay, all right. So again, let me delete this. Short-term buyers for AUD USD is long. All right, so of course we'll be looking to possibly take it here. We actually do have another unmitigated 4-hour zone. Uh, no, I'm sorry, that's why I didn't mark that. That is not unmitigated. This candle opened here, pushed back into the zone, and kept going. So we do have unmitigated 4-hour here, unmitigated 4-hour here, that we could possibly look to take this pair long on. So um, again, short-term institutional bias for AUD USD is long. We are on an uptrend because of the respecting of demand. So of course we'll be looking for a pullback because we don't want to buy at the top, but we want to wait for the market to pull back. We may get a situation where this market will possibly push into this 4-hour supply, maybe give us a pullback here, and then we can take it going up, trailing our stops, or just taking profit here, or pulling out, Fibonacci. Now, if this is going to be our high, all right, if the market decides to fall when it opens, and this is our created high, then of course we can take the Fibonacci and maybe look at the 78.6, because there is an unmitigated zone here. Now this zone has been mitigated, and as I always tell you guys, just because the zone has been mitigated, that does not mean that the market will not come back, because there could still be orders resting here. However, I like to chart and keep a lookout on unmitigated zones, because usually uh, those are going to be our higher probable areas of interest to take our trades long or short, but in this case long. So I do like this 78.6 percent retracement, of course. So yeah, be looking for possibly some areas or confirmation in this 4-hour zone right here, and possibly we can take it up and take partial profit based on Fibonacci, and ultimately market structure. Let's do this. Let's take a look at market structure again. We can definitely be looking into taking profit at these 4-hour supplies, pushing up into the institutional supply areas. All right, let's move on to pound USD. I'm going to go ahead and clear this out just so I can have a clear chart when the market starts. All right, pound USD. Pound USD, the short-term institutional, it the short-term institutional bias is long. Okay, we have everything here. However, we have been in a downtrend, meaning the respecting of supply supply areas. But as you guys can see, we did tap down into this 4-hour zone, which is nested inside of this institutional demand zone. So this could definitely cause this market to go up. So what would we be looking for? Because again, we don't want to just buy blindly, but we want to wait for confirmation. So what I would be doing is simply wanting to see this market go up, maybe tap into this 4-hour demand, pull back into a 4-hour, watch this market go up, tap into this 4-hour supply, and possibly pull back into a 4-hour demand, and then take this market to the upside. So again, institutional buyers for pound USD, short-term institutional buyers for pound USD is long, and again, of course, we want to wait for a pullback and push this up. Okay, and guys, when I say wait for a pullback, as I always tell you guys, please wait for confirmation. We here at the Teach Me to Fish Effects trading community, we have our own confirmation that we look for. You have to have your own confirmation that you look for. If you're interested in knowing what the confirmations are that we look for, then feel free to join the mentorship program. All right. So again, pound USD, we're looking to take this long, and just market structure and layout shows us that it's very possible that this pair could go long. We've had liquidity taken out right here. Let's do this. We'll do liquidity low. So we've had liquidity that was definitely taken out. So we could definitely get a manipulation here where the institutions basically just collected contracts from the retail traders, collected money from the retail traders, and now getting ready to head back up. So again, I will be looking for longs on pound USD unless some of these 4-hour supplies are being respected. Okay. All right, USD CAD, short-term institutional bias is short on this pair. Let's see where we could possibly take this pair short. We've already had a pullback into this 4-hour. Here, we'll draw this out for you guys, even though it has been mitigated, but we did have a pullback into this 4-hour supply zone right here. All right. That we could see this market really it reacted off of very well. All right, its first 4 hours tapped in, pulled back. The next 4 hours opened here, pulled back, closed here, and we had another bearish close 4-hour candle. So we could either go down to the lower time frames, catch a small pullback, and catch this short, or we can let this pair make its current run. More than likely it will take out this low here, where there's probably liquidity resting in disrespecting this 4-hour demand zone. Wait for a pullback and catch it going down, or we may get a respecting of this 4-hour demand zone, push up into another 4-hour supply before heading back down. All right, so again, the institutional bias for USD CAD is short, and of course we just want to wait for confirmation before we get into it. All right, Euro USD, institutional bias for this is long. We do see where we are sitting inside of an institutional demand or accumulation area, if you will, bouncing off of this 4-hour demand. All right, so this may be the bottom, and if it is the bottom, what we will want to do is possibly see this pair reacting off of this 4-hour supply, coming down and reacting off of a 4-hour demand zone that would be created, and taking this to the upside to possibly one of these supply areas, or just trailing our stops. All right, and that is Euro USD. USD JPY, institutional bias here is consolidation. We can see where this pair has been consolidating here in between this high, most recent high here. Let's go ahead and throw up a swing high there, and the swing low that has not been broken. All right, so where could we see this consolidate? This pair could come back up into this supply area here. Let's grab our arrow. We could see this pair come up into this supply area, come down and bounce in between these zones or any zones that may be created, or we could see this pair to simply come down into the institutional distribution and bounce in between this institutional accumulation. All right, so we could see that, or we could see a breakout. All right, it could consolidate for the first part of the week and then break out, or it could break out, creating newer highs and newer lows and consolidate in between those. So just be on the lookout for this pair. It could definitely break out, and we could definitely take trades going long or short, or again, you can simply wait for the consolidation to break. But again, for me being a supply and demand trader, um, we always have opportunity. Okay, we always have opportunity because there are always zones being created. Again, we prefer unmitigated zones, but again, we can definitely take trades off of zones that have already been mitigated. Now, those type of trades are higher risk, but nonetheless, they are possible trades that we could take. All right, let's take a look at the USD Swiss. All right, USD Swiss, we have short-term bias of consolidation. We can kind of see where this pair has already been consolidating, so it could be a continuation of the consolidation, or we could eventually get a breakout. Now we do see where this pair has been making higher lows here. However, it seems to be um, leveling off right here. So, simply put, we'll be looking and waiting for this pair to react to our zones. We've already reacted to this zone that was mitigated. I can't remember what the short-term bias was for last week, but if we were looking for longs, we definitely see where this pair came into this 4 hour zone and reacted off of it, and probably was a nail biting trade, but nonetheless could have been taken up to the upside. And you guys know I typically would like to see this pair come into the 50% of the zone, wait for confirmation, and pop in. And of course, we always go a little bit outside. Probably would have lined it up with this one. Would we been stopped out? I think we probably still would have been stopped out on this one, but trying to get that 4-to-1 trade, if we were not stopped out, could definitely have gotten into a profitable trade there. But again, this week we are looking for the short-term bias is consolidation or possible consolidation. So we just want to watch out. This zone should be off of here because it's been mitigated. Let's see our next unmitigated zone, 4 hour zone. I'm going to mark to be here. All right. That has been mitigated. That's why we don't have that one. All right, so our next unmitigated 4 hour zone would be in this area. Um, so we could definitely see this pair bouncing in between this 4 hour zone or even this institutional accumulation area, and bouncing in between this 4 hour supply or even coming up to this 4 hour supply. Uh, this 4 hour supply has not been mitigated, so let's throw this in there. We could possibly see a reaction this week off of this zone as well. So this pair is consolidating. You just want to watch for it when it gets around your zones, all right, and wait for confirmation before you get into a trade. Or you may simply only want to wait for the definitive markets, meaning the markets that are definitely going up or are going down. All right, let's take a look at the Mexican peso. Short-term institutional bias is short. We have made our way high up into this institutional distribution slash supply area. We do have an unmitigated 4-hour supply zone up here that we could definitely possibly see this market come up into that 4-hour supply and react off of it before heading down in favor of the Mexican peso, possibly taking profit at these lows here, as well as this 4-hour demand that we could see price possibly return to this week. So again, USD versus the Mexican peso. Short-term institutional bias is short, so you guys want to be on the lookout for that, and of course wait for confirmation. All right, NZD USD short-term institutional bias is consolidation. Now we do see that this pair is sitting inside of institutional distribution. However, it is in between a 4-hour unmitigated zone supply zone and a 4-hour unmitigated demand zone. We actually have two zones stacked on top of one another. This one is barely touching this demand zone. So maybe we could possibly see this pair come to this 4-hour that was just recently created on Friday. All right, and let's get rid of this. Okay. So we could see it bouncing in between these two unmitigated 4-hour zones, or we could see it come back down and bounce somewhere in between the institutional distribution and this unmitigated 4-hour zone. We do have several zones below that where we could see this market bounce off of. But again, in a case like this, we want to wait for price to get into our areas of interest, which are our supply and demand zones, wait for confirmation, and take those trades off of there. Okay. Moving right along to Bitcoin. All right, short-term institutional bias is long off of this pair. We do see where this pair came down close to this 4-hour demand and kind of got a brief response. I'm thinking that we may see this pair sometime this week either pull into this 4-hour demand and push up, or come back down to another 4-hour demand and push up. Now if we take this pair, all right, and let's take a look at our swing highs and our swing lows. If we take a look at this most recent swing low to this most recent swing high, we can see where we did get a reaction off of the 78.6, but again, we could come down more and retrace more before heading up and maybe getting a couple of touches and bounces and pushing through these 4-hour supply zones. So again, for me, the short-term institutional bias is going long. So again, I wanted to wait to see how the market reacts to these 4-hour demand zones, even down here into this institutional accumulation area, which has an unmitigated 4-hour demand zone. So just wait for the market to get into these areas for Bitcoin, see how it reacts, wait for confirmation, and possibly take your trade to the long side. All right, gold. All right, gold. Short-term institutional bias is long. My short-term institutional bias is long on this pair. We are sitting or resting at the top of this 4-hour supply zone, which was not mitigated until the very last part of Friday. Okay, so what could we see? What would we want to see? You guys know what I'm going to say, right? I want to see possibly a pullback into this 4-hour demand zone, wait for confirmation, and try to take this up maybe into this 4 hour supply zone, which is nested inside of an institutional uh, distribution area. We have several areas or supply areas for gold that have not been mitigated. All right, so we can definitely possibly see gold trade up into these supply areas, get a quick reaction, and keep pushing through. Don't know how far or how long gold will go up, but yeah, let's take a look at the monthly, and we can see here where gold is seemingly getting back on track to head up, while the U.S. dollar is losing value right now. Let's jump back over to the 4 hour. So again, we have our areas, or I have my areas of interest that I would be looking for. I would be interested in this 4 hour demand zone. All right, this larger 4 hour demand zone. It has been mitigated. All right, we see where price left, came back, filled some orders, and kept going. However, if we look right here, we do have this unmitigated 4 hours that was nested inside of there, that where we can see price come back and maybe fill some more orders before heading back to the upside on gold. So again, my short-term institutional bias for gold is long, so I will be looking for the areas of interest that are demand, uh, to for price to come into those areas of interest. Look for confirmation to take this pair going long. Same thing with silver. Short-term institutional bias is long. These metals, they play a big part whenever, or we can see these gold and silver metals catching value as the U.S. dollar is losing value. Excuse me, simply because a lot of individuals see gold and silver as a safe haven, as the U.S. dollar is losing value, especially with things where we have uh, currencies being created on a daily basis. We have crypto, like different crypto coins being created on almost on a daily basis, really causing the U.S. dollar, if you will, to lose value. And of course, there are some other economic economical factors, inflation and uh, uh, job uh, job losses, job gains, companies taking business to foreign countries to have their products created, even service based companies looking to hire foreigners to do the jobs that typical Americans would do, but would require a higher wage. So they take these jobs overseas because of them having to pay less in wage, having to pay less to no taxes. So again, these metals, they are safe havens as the U.S. dollar is losing value. So again, institutional bias for silver. Short-term institutional bias for silver is long. So of course, I would want to be taking a look for price to come into these unmitigated 4 hour zones. Wait and see how price reacts to them. Wait for confirmation, and of course, take these pairs or take silver long. I'm just throwing in some more unmitigated 4 hour zones that I'm looking at right now, um, that silver could definitely react off of, giving us great discounts. So even if we take this low to, maybe if this is going to be the high, maybe seeing uh, silver come into the 23.016 zoned area or area of interest. Simply because, guys, again, that's 78.6% retracement as a confirmation, as well as this zone sitting right here. Again, we could see we do have a zone right below the 78.6 retracement that we could see price um, come down and shoot off of. That would be great. Or um, this market could shoot up higher into this institutional distribution here. Let me get rid of Fibonacci, but it could come into this institutional distribution where we actually have a couple that are stacked, uh, pull back to this zone or any other zone that we have charted here before pushing back up. Of course, we're not going to just sit and wait or immediately hop into the trade, because we don't want to buy the market at the top. We want to buy the market in a discounted area. All right, a discounted demand area before taking this market long. So again, the short-term institutional bias is long for silver. We just want to wait for these areas, or wait for price to come into these areas, wait for confirmation before getting into our trade. U.S. oil short-term institutional bias is long, guys. Gas is going up here in my city that I live in here in Florida in the United States. I think the highest price I saw for gas locally was $3.99. So almost $4 a gallon. All right. So for me, that is up there near the record highs. I know that when I was younger, much younger, many years ago, um, when we had the Gulf War, I saw gas skyrocketing. So uh, I'm not going to get into any conspiracy theories, but you guys know that the war is going on in between the Ukraine nation and Russia, and a lot of that stuff it fuels the price of gas, the price of oil, for lack of a better term. So we are sitting in institutional distribution, tapping into this 4 hour demand. We did have a pullback and tapping into this 4 hour supply. We did have a pullback, creating a 4 hour demand where we could possibly see price pull back into this demand and push through these supply areas. Okay, um, or again, we could see price come back a little further, give us a little deeper retracement, a little deeper discount before the market gets pushed up. So again, short-term institutional bias is long on U.S. oil, but again, we just have to wait for price and see how it plays out. Last but certainly not least, short-term institutional bias for the S&P 500 ETA or EFT, ETF. Anyway, it's consolidation. So we do have price sitting in between these 4 hour zones. Will it stand these between these 4 hour zones? We don't know. It could be bouncing. It could bounce in between these institutional accumulation and distribution areas that I have marked here. But consolidation is definitely on the forecast this week for the S&P 500. If the consolidation lasts all week, I don't know. Um, will the consolidation be over at the very beginning of the market opening? I don't know, but what I do know is we have some good areas of interest here. I'm going to take this one off because it's been mitigated here, but we do have some decent areas of interest that I would love for price to come back to, and for us to be able to take a trade off of, as long as our confirmation sticks. So Again, short-term institutional bias for the S&P 500 is consolidation, and again, supply and demand traders, more than likely we will be able to get a setup. We may have to go down to the lower time frames, 15-minute, 5-minute, even the 1 minute, to look for our confirmations. But we should definitely be able to take some type of trade off of these consolidating pairs. All right. All right, guys. So I'm sorry. I know I rushed through this. I really wanted to get this out and give you guys a general idea of what it is that I will be looking for, and possibly to help you guys on your trading journey this week. Now, if you guys would like to be a part of the mentorship program, where I don't necessarily trade uh, rally based supply and demand, but we look for more institutional areas in the market that we like to trade from. Now, don't get me wrong, these rally based supply and demand zone strategies, they work. You just gotta wait for confirmation. Along with anything else, have your confluences, whether it's Fibonacci, if you like using RSI, if you like using, I'm gonna give you guys a pro tip here that I don't see a lot of people talking about, but you can actually use Heikin-Ashi candles. Wait for it to come into your supply and or demand areas of interest, and simply wait for the changing of the Heikin-Ashi. So if you made it this far in this video, I just gave you some sauce. Maybe you already knew about it, maybe you've never implemented it. Give it a shot and see how it works out for you guys. All right, guys, that is going to be it. Thank you so much for tuning in this week. If you're not a subscriber, feel free to subscribe. Let me know how you guys feel about this video, whether you like it or dislike it. And guys, please be comfortable enough to comment down below. All right, guys, until next time, always remember, if you stay in God, you will stay in control. Happy pip fishing, and always wait for confirmation. Bye-bye.